joins us now exclusively. Anthony, good morning.
Good morning, John.
I think investors have always had a hard time understanding Roku and where it's going. Interesting here, some people were hoping for a bigger active platform user number, I guess, but the amount of engagement on the platform, the number of minutes of content that people are consuming was a lot higher than a lot of people had been looking for. So how do you see the way you're positioned and the challenge this holiday season in getting Roku hardware in people's hands and living rooms versus other people's?
Yeah, well, I mean, we had, as you said, we posted some great numbers. We had a great quarter. We beat our outlook. We beat the analyst consensus, just as we've done every quarter for the last 5 quarters since we went public. And, our business is just in a fundamentally good spot. We're well positioned. If you look at, say, for example, active accounts, which is a key operating metric for us, active accounts ended the quarter at almost 24 million. That's up 43% year over year. And if you look at other industries, for example, the traditional U.S. pay TV industry, they lost 1 million subscribers in the quarter, whereas we added 1.8 million net new active accounts. So cord cutting is a real phenomena, is happening, and as consumers start to understand more and more the benefits and the advantages that streaming offers, they're switching to streaming. So, that's a great trend for us. We're well positioned, and we're set up for the holidays. The holidays, of course, are great for us. We always sell lots of products. We sell lots of Roku. Well, we don't. Our partners sell lots of Roku TVs that we license, and we sell lots of streaming players. So we're looking forward to a great Christmas.
There was a bit of talk on the call about the percentage of, I believe it's the 18 to 35 demographic that's actually viewing TV through Roku. I believe you guys said, by your calculations, it's 10%. You also say that you have the ability to do attribution through of the digital advertising at a level that's much higher than traditional cable companies, traditional TV has been able to do, and you expect to balance out and spend. Give me a sense of time horizon, if you can. Do you have those relationships of how long it's going to take for your representation in viewers and an attractive demographic to get equaled by the amount of the spend that you're able to capture? Does that happen in 2019? Does it take a year or two longer?
Yeah, so this is interesting. So most of our gross profit comes from advertising. We have our platform segment, which is our non-hardware segment, which is where most of our gross profit really flows from. The platform segment was up 74% in the quarter, very healthy growth. 2/3 of the platform segment is advertising. Video ads in particular were up 100% in the quarter. That's awesome growth. And I think the stat you're referring to is that there's some data that shows that if you look at a particular Nielsen demographic, 18 to 34-year-olds, 10% of those, the people in that demographic are using Roku to watch TV. So if you're an advertiser, you're seeing your viewers shift from traditional linear TV to streaming. 10% of the people in that key demographic have shifted not just to streaming, but to Roku in particular. And so if you want to reach them with a video ad, you need to advertise on Roku. And so that's one of our key, obviously, pitches to our advertisers. And then, of course, streaming is streaming ads are just a fundamentally better ad unit than a superior ad unit to linear TV. And for a lot of reasons, they're targeted, but they're also, every one of them is measured. And so, yeah, that's one of the techniques we use, is that we measure ads. We bundle a lot of data analysis with our ad sales, so because we know that our ads work better. And so when we show that to our advertisers, they're getting a better ROI. The ads are working, and they know that they're working because they're trackable. That really helps them. It helps advertisers have the confidence to increase their budgets. And so, the ad business in the U.S. is a $70 billion a year business. It's all moving to streaming. It is lagging the viewers, but that's how it always works. I mean, when viewers move to mobile, the ad dollars took a few years to catch up, but they will catch up, and it's going to be a very large business.
Anthony, I'm staring at a CNBC report right now that Roku is talking to more media companies about putting their content directly on the streaming app in exchange for a larger share of advertising revenue. What can you tell us about those plans?
Well, I mean, I can't talk about rumors and speculation, but I mean, Roku is a content distribution platform. That's our business. We distribute content. We do it through apps. We do it through the Roku channel, which is an increasingly popular way for our viewers to get access to content. So in the Roku channel, we aggregate content. We started with we started with entertainment, movies, and TV shows. We continue to add depth to that. We added news recently, and we've had some great news days. I mean, maybe not great for the country, but the hurricane was a great news day for the Roku channel. And the midterm elections actually recently were very popular on the Roku channel. We added more news content to the Roku channel in anticipation of that, and we'll keep we're going to keep adding different content categories to the Roku channel.
Want to slip another question in. Comcast is looking at doing a streaming box for those who don't have cable. Novel idea, I know. That's the parent of this network, by the way. But what is it that you view as being Roku's continuing competitive advantage once the cablers and increasingly the Googles and Apples of the world trying to enter more and more into the streaming device space to try to pull more of that streaming and cord-cutting trend in their direction?
Yeah, I mean, this streaming is a huge business. It's going to be a huger business, and so it attracts big competitors. But that's not new. I mean, Roku's been competing with big competitors for our entire history of streaming, and we've been doing it very successfully. We're America's #1 streaming platform by hours streamed. Our market share is actually growing. We get our market share by selling players, and we win because we're laser focused on streaming. We have the only purpose-built platform for streaming. We focus on ease of use, value, great content selection, and we win reviews. The Roku Streaming Stick Plus just recently won CNET Editor's Choice. So we're focused on it. We build great products, and we've been competing very successfully with these companies, for a long time.
Anthony, thanks, and the stock is off the lows. Anthony Wood, CEO of Roku.